Hey everyone, welcome back to the channel. Today, we're diving deep into Franklin Covey Co, ticker symbol FC, a player in the consulting and training space that's been around for decades. If you're curious about whether this stock deserves a spot in your portfolio, stick around because we're breaking down everything from financials to valuation, recent performance, and more. Let's get started. So what's the big picture with Franklin Covey? This is a company focused on organizational performance improvement, offering training and consulting services in areas like leadership development, sales performance, and productivity. They're behind well-known programs and tools inspired by concepts like Stephen Covey's 7 Habits of Highly Effective People. Headquartered in Salt Lake City, Utah, they've built a global presence helping businesses and individuals sharpen their skills. For investors, this is a niche player in the industrials sector, specifically consulting services, with a market cap of about $258 million as of the latest data. Let's unpack what makes them tick. A little more on Franklin Covey's background. They were founded in 1983 and have evolved into a trusted name for corporate training and personal development. Their business model revolves around subscriptions, services, and products, often delivered through workshops, digital platforms, and licensing deals. They've got a workforce of around 1,084 employees and operate across multiple regions, with a heavy focus on the Americas. Under the leadership of CEO Paul Walker, they've been pushing to expand their subscription-based offerings, which we'll talk about more when we get to revenue. For now, just know they're not a flashy tech stock or a consumer giant. They're a specialized firm aiming to improve how organizations function. Let's talk numbers, starting with revenue. For fiscal year 2025, Franklin Covey reported total revenue of $267.1 million. Breaking it down by segment, subscriptions are a huge driver, bringing in $147.9 million, or over half of their top line. Services and products contributed $99.3 million, while royalties added another $16.6 million. Geographically, the Americas dominate with $226.8 million, followed by Asia Pacific at $23.1 million, and Europe, Middle East, and Africa at $17.2 million. What stands out here is their reliance on the Americas and the growing importance of subscriptions, which suggests a shift toward recurring revenue, a good sign for stability in a consulting business. Compared to fiscal 2024, where revenue was $287.2 million, there's a slight dip, but we'll dig into what's behind that when we look at earnings. Moving to earnings, Franklin Covey's fiscal 2025 results give us a mixed picture. Net income for the year came in at $3.1 million, down significantly from $23.4 million in 2024. That translates to an EPS of 24 cents compared to 178 cents the prior year. Operating income also dropped to $5.7 million from $33 million, pointing to some cost pressures or operational challenges. On a brighter note, their gross profit margin remains strong at around 74.5%, showing they're still effective at maintaining profitability on their core offerings. Looking at recent quarterly updates, like Q2 2026, management noted continued momentum from go-to-market changes and double-digit revenue growth in certain areas, which is encouraging. The key takeaway: earnings are under pressure, but there are signs of strategic progress that could pay off down the road. Now let's touch on some insights from their recent earnings calls. In the Q2 2026 discussion, CEO Paul Walker expressed satisfaction with the company's trajectory, particularly highlighting invoice growth and expanding deferred revenue. Management emphasized their focus on subscription models and strategic sales initiatives as key drivers for sustainable growth. They're clearly doubling down on transforming how they reach clients, which aligns with the strong subscription revenue we saw earlier. This optimism from the top suggests they're confident in navigating current challenges while building for the future. Let's dive into the financial statements for a clearer view of Franklin Covey's health. On the balance sheet for fiscal 2025, they're sitting on $31.7 million in cash and cash equivalents, with total assets at $242.9 million. However, total current liabilities are high at $157.3 million, giving them a current ratio of just 0.63, which indicates potential liquidity concerns. Total stockholders' equity stands at $66.9 million, down from $83.1 million in 2024, reflecting some of the earnings weakness we discussed. On the cash flow side, they generated $28.9 million from operating activities in 2025, with free cash flow at a respectable $20.7 million. Debt to equity is low at 0.02, so they're not overly leveraged, which is a plus. Overall, the financials show a company with solid cash flow, but some balance sheet risks to watch. Now, how does Franklin Covey stack up in terms of valuation? At a current price of $21.55, their price-to-sales ratio is about 0.95, which isn't overly expensive for their sector. However, the price-to-earnings ratio is a staggering negative 106.6 due to the low net income in 2025, so traditional PE isn't very helpful right now. Looking at forward PE estimates for 2026, analysts peg it around 62, which still seems high, but reflects expectations of earnings recovery. Enterprise value is $236 million, and with a free cash flow yield of 8.9%, there's some value to be found if they can stabilize profits. Compared to the consulting services industry average PE of about 43, FC looks overvalued on forward metrics, but their niche focus and subscription push could justify a premium if growth returns. Let's break down Franklin Covey through a SWOT analysis to see the full picture. Starting with strengths, their brand is a big asset, tied to iconic personal development frameworks. They've got credibility and leadership training. Their subscription revenue model also provides a steady cash flow base. On the weaknesses side, recent earnings declines and a weak current ratio highlight operational and liquidity risks. For opportunities, expanding digital offerings and tapping into emerging markets could drive growth, especially as companies invest more in employee development post-pandemic. Threats include intense competition from other consulting firms and online platforms, plus economic downturns that could cut corporate training budgets. The balance here is between leveraging their brand for growth while addressing financial vulnerabilities. Looking at recent performance, Franklin Covey's stock has had a rough ride. Over the past week, it's down 18.1%, and over the past month, it's dropped 27.3%. Zooming out, the past year shows a painful decline of 55.9%, underperforming both the broader industrial sector, which is up 28.3% over 5 years, and their consulting services industry, which is down 7.4% over the same period. On the chart, we're seeing a clear downtrend with no strong support levels in sight yet. For short-term traders, there's volatility to play, but long-term investors might want to wait for signs of a reversal or better fundamentals. The stock's beta of 0.58 suggests it's less volatile than the market, which could appeal to risk-averse folks despite the price drop. Let's wrap up the numbers with an intrinsic value analysis to see if Franklin Covey is undervalued or overpriced. Using a discounted cash flow approach with historical data and standard assumptions like a 10% discount rate and 3% terminal growth over 5 years, we can estimate the stock's fair value. I've run the numbers based on their free cash flow trends, which have been solid, averaging around $30 million annually in recent years when excluding weaker periods. The result? My model suggests an intrinsic value of around $61.78 per share, compared to the current price of $21.55. That's a significant gap, indicating the stock could be undervalued if they can turn around earnings and maintain cash flow growth. Keep in mind, this assumes a recovery in profitability and no major disruptions. If you're a value investor, this might catch your eye, but the risks we've discussed, like liquidity and competition, mean it's not a slam dunk.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.